All right, good morning, everybody. How's everyone doing today? Hope you all had a great weekend. Please let me know if you can hear me. Hopefully I'm coming in loud and clear. Morning, Miles. All right. Hey, John. All right, so market's getting ready to open any second. We got about a minute and a half, a minute or so. Kind of a rough start with the micro crude on Spotlight. Had this really nice move here, but it just was a little too fast. Actually jumped on the counterpunch trade, which was a good thing for me because then there were a couple shorts here that both lost. This one, obviously a target one winner. And then if anyone taking another trade would have also won. The mini session, of course, is 3 trades. So, curious how you guys did on that. Good morning to you, Jeff. Johnny from Seattle. Nice to see you guys. This was a really nice trade with counterpunch with a 377 tick. This was a little bit more orderly and easier to grab, and that's the one I took this morning. Just missing some major key levels by a tick or two, but was able to lock in a nice little move here. And it was a bigger trade, 57 ticks of risk, so 46 to target 1, 71 ticks to target 2, which I moved my target down a couple ticks off of below the 75 because I know that quarter century number is pretty tough, and that was a pretty strong move. So I was actually able to grab it because it hit 73, which was perfect to where I had adjusted my target down to. So same with this one. This one was 52. I moved it down to 48. Grabbed them both. Anyway. What else? Unleaded gas. Well, let's pay attention here to the YM. As I'm talking you through that, the YM just came in and hit its goals. Probably should have paid attention to this first. Sorry about that, guys. But there's the YM right when the market opens. Pretty good amount of time here to grab it. I mean, you had to be quick. Got about 8 seconds, maybe. That's tradable. 37 points at target 1. Stops moved up. I would keep the stop at 512 if you're in that trade. It's going to move up in a moment. Again. John took it. Good job. Yeah, nice work also on trading the crude and missing that second short like that. Watch out on the YM. The stop just moved up. 523. Oh, just stopped out. All right, that one's done. One and done. Oops, unleaded gas also. Nice morning this morning. Well, 9 a.m. start, as you know. I don't know if anyone was able to. I might have went too fast. It's hard to say. Did hit target 1, but then the second trade, plenty of time for that one, and that one came up and hit target 1 and target 2. So regardless, unleaded was one and done today, and then another trade also, really nice one there too, and another. So literally 4 winners in a row. So unleaded gas, plenty of opportunity there. What else? Let's see. How about the pound Aussie? Well, the pound Aussie, right at 8:30, coming down to hit the entry and then pushing higher and hitting targets 1 and 2 for 19 and 29 pips. And this one is now trailing. 75.24 is the trailer. And this one will be one and done. Boy, Mondays are always fun, aren't they? All right, we're getting to our 4-minute wait time for the NQ and the custom Renko. Do have a short, heads up, at 14,129, and it did just hit our 4 minutes. Well, actually, that one stopped out already, so that one would have canceled. We'll wait for a new setup. How about crude oil getting down into the 90s, breaking below the $100 a barrel? Currently sitting at 94.66, the May contract. Short on the NQ, 14,121. Stops at 14,133 and 3/4. It's got to make new swing lows here. Definitely testing these lows, and it's down 200 points. So this might not be the best place to go short, but that is the first trade this morning. And now long, so that one definitely was not so great. You can see how fast this is moving. Not even tradable. I can't even get the call out of my mouth. That one can still be grabbed, I guess. 14,121. If it comes back down, let me stop out. And the stop would be 130.5. So it did come down and hit the entry again. Let's see if it could break through. It did make new lows, but all right, failure to get lower. We'll move higher, but it's moving too fast. This chart is probably harder to trade. Obviously, it's much harder to trade. You got to be committed to it because it'll pick up a couple losses, but then it hits the home run. Anyway, there's the long. Got in at 14,130. Stops at 116.75. Just hit the entry again. And there's your target one. And now the stop's moving up. And it did just hit a nice big target 2. If you trade a chart like this, you kind of have to be a little discretionary because it moves so fast. And you want to try to grab trades that we know give us good odds. Like when it broke to new lows here and failed to follow through, instantly you should be thinking, well, the failure to follow through could lead to a strong move in the opposite direction, which it did. Look at it hit target 4 right on the nail. And if you just lay in wait for those situations, you can do very well. This takes practice, of course. Again, welcome everyone. I see a lot more people joining. Hope you guys had a good weekend. Kind of nursing a bad voice, so I'm doing my best here to hang in there for you. If anyone has any questions, feel free to type them in. Also, if you guys wouldn't mind hitting the thumbs up button, I'd appreciate it. YouTube likes when you like. So with Counterpunch, by the way, or Counterpunch Express, the 9 a.m. start time is definitely a nice trade time to use a 377 tick chart. You could use a momentum bar also. You just have to realize it could be very fast. This one, I saw this setting up seconds before, and I had my trade in and was clicking the enter button right as the clock was ticking 9, got filled, and it worked out pretty nice. Didn't quite get to target 2. Usually with Counterpunch, I'm not taking profits at target 1, but this was, even though it doesn't look like much on this chart, it was actually a really nice trade. It was big. I like the bigger trades. And I also noticed the white trade, of course, and then the first set of exhaustion dots that makes higher lows than the one prior, fairly close in proximity visually to the first set. And that first green trade is money usually. Like the odds are really strong. So I'm like, well, this trade's made to order, I'm grabbing it. And it worked out. And because it was such a large trade, and because with micros you can divide up your positions really easily, was very happy to move my targets a couple ticks below the key levels to give it a higher chance of success. And it worked out really nice. And taking profit at target 1. I don't mind a 0.8 to 1 risk-reward ratio on a strong strategy and plan, especially with a part of my position. So part of my position coming off right before target 1. And I didn't really mess with beyond target 2 because I just wanted to grab the money. I knew the session this morning was starting. I didn't want to have to mess with the trade, so it turned out to be a pretty nice decision just to exit everything a couple ticks below the 75. Remember, with crude oil, that quarter century number could be really sticky to get through, hard to get through. 75 cents. This is at 77, 2 ticks beyond for a 71 tick trade. So I was perfectly fine moving it 2 ticks below. I gave up 4 ticks. And it was like perfect. It hit 73 right on the nail and actually got filled too. So I can't ask for more than that. Good morning, Pamela. Any Forex traders in the house? I mean, Forex has been on fire. I don't know if you guys have been aware, but obviously when there's big major world events, Forex gets big major moves, basically, just keeping it simple. And I'll show you some of these charts that I use, but this one you all should know very well. This is the pound yen, and it's just been doing nothing but winning and winning. That one got all the way up to target 3 there. Target 3 was 775 pips, and the trailer went even higher a little bit. Winning, 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 winning. How many winners is that in a row? Winning keeps winning. I mean, this goes all the way back to January. Has it had a losing trade? Maybe this one, but for whatever reason, the automation didn't pick up on this. I'm not sure why. Was that a Sunday? That might be why. Just following the automation. Still winning. That's already last year. So just on the automated trades, which I'm not automating this, obviously. TradeStation is not a Forex broker, but I use the automation just for the stats on it, and then I take the trades based on what the automation says, because the results of the automation are just so amazing. But there has not been a losing trade at all in 2022 with this trade plan. Not a single one. Yeah, and no pound Aussie setup on Ninja. Oh, you're talking about the one I showed you, John. Yeah, TradeStation had that nice winner. So obviously this is not Counterpunch Express 2, guys. This is Counterpunch Trader. Because Counterpunch Trader has automation. Counterpunch Express 2 does not. So this plan also uses some other things that Counterpunch Express doesn't have. I have a variation of this trade plan that's been adopted for Counterpunch Express 2, but it's not the exact same one because it doesn't have the ability. This uses some advanced tools. It lets you use the average true range as an adaptable and dynamic entry and stop calculation, and Counterpunch Express 2 just doesn't have that. So that's part of the success of this plan. This plan has been going for like 16 years. This is looking back to 2011, but it started like almost 7 or 8 years ago with a 10-year look back and speed forward, and it's still hitting at almost 86%, 87, 85 and 3/4, and just broke to new equity highs. I mean, this has to be a staple if you're trading Forex because of, I mean, well, I don't really need to tell you more why. You just saw it. Brett on Spotlight. Oh, let's see. You have another question. Could you go over the 7CL for short? Stopped out, took the long, and avoided the reverse, but since the reverse didn't trigger in, I'm not sure how to handle that after that. Oh, sure. Let's go over that. Anyway, if you have any questions about this, the last thing I'm going to say about this particular chart, 4-hour charts are obviously tricky. No one wants to have to pay attention to your chart every 4 hours. I don't. But you can compromise. There's ways to trade it. You could use snapshot trading where you just get in sync. So, for example, well, this plan only uses a 4 p.m. and an 8 p.m. setup bar. So this one was at 8 p.m. But look at all these bars that you had the opportunity to grab the trade. I mean, there's probably 20 of them or 15, I don't know, but each one's 4 hours. So you have like a couple days or 3 days maybe where you could literally place that trade. And that's how you want to handle a chart like this. You don't want it to take over your life. You want to fit it into your lifestyle. You use a snapshot trading and get in sync with trades when it's your 15 minutes in the evening to look at your charts. If the trade is there, you take it. If it's not there, don't fret. There's another bus coming. And then you use FX Synergy to manage so that when you hit your money management, it's going to move your stop to break even. Very minimal imposition on your life. You could check it if you want. You could set your clock every 4 hours after that. If you want, move your stop. But if you don't move your stop, even if your stop is still down here, you still got plenty of time. I mean, sometimes you'll wish you moved it sooner, but you just can't let things like that bother you. You have to just make it work in your life, and you don't have to trail this technique. You could trail any technique. This trails a slower signal line, the dark blue line. Anyway, final comments on that if anyone's interested. Yeah, and John, Brett, we always use exchange time, so when you say 7 a.m., I'm thinking 7 a.m. New York time. And if that's not what you mean, you need to clarify. Always use exchange time because obviously the exchange never changes, but we are all in different parts of the world. So to avoid confusion, I always use exchange time for every chart 100% of the time whenever I discuss anything trade related, time-based related. Yep, no worries. Just that was a good question because I was thinking 7. I was going to look at the 7 o'clock chart and you're going to be like, wait a minute, that looks totally different. So John picked up on that. We're all in different parts of the world, but the exchange is always where it is. So exchange time 100% of the time. That avoids confusion for everybody all the time. And look at crude. Crude's down big. These moves in crude are just a joy for crude oil traders because this kind of range, there's just massive profits to be had, especially if you really hone your skills and get, not only really good at what you do, but also practiced. And if you learn how to work with the strategy and learn the strengths and weaknesses of each type of setup, then you can start to apply a little twist of fate, if you will, a little nuanced rule that helps filter certain trades and focuses on others. That's when you advance your trading to a higher level. So clearly there were 2 losers in a row. I mean, the winner happened seconds before the start time. Unfortunately, that's the one you wanted. But if you're starting right at 9, it was past the entry at 9. Never pulled back to it. Which, as you know, usually on Mondays, we're one and done on crude oil. I mean, that's just been like how it normally is. It's been like that for so long. Every now and then it isn't. And today it almost was. It just missed, the market doesn't care about time, obviously. It's just a man-made thing. It's what we do for our own trade planning so that we can measure our results accurately. I mean, that's the whole point to having a hard start time. But maybe you have other things you notice and you work that in just from an advanced. Let's just look at this for a second. A lot of support on that 50 moving average pushing up towards the 200, right? It's broke down, failed to make new lows. Pretty good move in the opposite direction. Not really anything that can be traded. Obviously, it's way before the start time. Then you have another set of exhaustion dots. It's making higher lows to the one prior and support with very bullish bars. Usually when you have a small body, long tail, and then it comes down and tests again. Pay attention to something like that because maybe you cheat your rules a little bit and start sooner because of the chart configuration. Anyway, just pointing that out. It's easy to see after the fact. Obviously, I'm aware of that. So that one goes. So we took the long and avoid. I'll go over there. First short stopped out, took the long and avoided the reverse by adjusting entry. So the first stop, that one stopped out, and then you avoided. I'm not sure what you're looking at because then there's a second short. One of the things that I like to think of when you're in a rally up, couple things. Oh, should I look at CL and instead of I'm looking at MCL? Hold on, you're right. It's the wrong chart. Sorry about that. Alright, let's just change this. Yeah, totally different looking chart, obviously. So 9 o'clock, trade got away. Here's the short. So, couple things here. One, usually if I'm seeing a short like this, I like the fact that there's a space down to the 50 moving average because it gives the trade a chance to get down there. I don't like the fact that this is the first or second, looks like more of a second leg up, which is usually the stronger leg. And if you're thinking about action, reaction, subsequent action, I don't want to trade into a reaction. So one of the things I'll do is I'll wait for it to come up and test the highs and then come down. If it comes down again, then take the trade. And it did, came down again. But it looks like it's going to go through, but it doesn't. That trade's going to lose regardless. But that's a technique I do. Right, I try to at least get a little more price action confirmation. Unable to break through the resistance, coming down again, grabbing the entry here, and it still loses. I mean, it's not perfect, but that's still a way that I handle that sort of thing. Because what I don't want to do is trade into a reaction. I want to trade the action moves. And of course, the reaction goes a little longer than you would hope based on where that setup is. That's just a losing trade. So then the long trade, and the question, am I getting the question right since the reverse didn't trigger? I'm not sure what reverse you mean because I don't consider this a stop and reverse. I mean, technically it is because it stopped and reversed, but the stop was the natural stop of the trade, so it would have stopped out regardless. A stop and reverse for me is when we got to move the stop lower to reverse. But anyway, that's just semantics, but that's how I look at it. Okay, so the question is, since the reverse didn't trigger in, I'm not sure how to handle the stop and reverse from the long. All right, so the next one. So you're in the long trade then, and then now the short. So that would be, you probably adjusted it, what, to 34? And then that happened, it got to 35. So still hasn't gotten to 34. And then it does. So I'm not sure what the question is then, because you would be short at 34 over here, where it comes down and hits 34, right? And then, of course, you have another stop and reverse at 46, and it gets to 45, and that's going to cancel. Then you have another stop and reverse. That's going to be at 46 also, and that's going to get long and come up and hit its winners. So, without overthinking things, Brett, you just have to follow the sequence. If you start overthinking things, then you go crazy because you get away from your trade plan, and then what? So, just let's go back a second and walk me through the thought process that had you not knowing what to do, because I'm not exactly... This seems really straightforward to me. Without overthinking things, we have a way of handling stuff. The long on the 50 reverse. Okay, I think the answer you are looking for is the stop and reverse stays valid if the unadjusted entry is hit. Yeah, I mean, there's no reason for it to there's nothing invalidates. What would have invalidated the setup there? Right, I was wondering if the short reverse is still valid, meaning since it didn't trigger in. Well, it took more bars to trigger in, but it did trigger in. Like, number one rule, as a general overriding principle to everything you do trading-wise, is to not overthink things. Right, okay, but that, and John Lazar gave you the answer there. Because the trade rule is not if the original trade never triggered in and then you had the two closes above the jump line, the balance line, you would cancel it. But the trade did trigger in, right? It hit the natural unadjusted entry. So then you just stay with the trade. Maybe it'll not come down again. Maybe instead it'll go up and stop out, and you'll still be in the long trade, obviously. Would have been good if that happened. But it didn't. It pushed lower, and it actually pushed through the adjusted entry. So, there's no reason. Look, you can make all kinds of rules if you want. You could say even on an adjusted trade, if you get the two closes above the balance line, then cancel it. That's just not any rule that I came up with. You're the trader, you can come up with any rule that you want, but then test it. Don't just do it because it feels good. Like, my way of thinking is that the strategy is smarter than me. And so I'm not going to try to invent a bunch of rules that changes it too much. Like, from my point of view, the setup itself is the boss. There's a reason there's a setup there. Not all setups are going to win, obviously. The reason why we do a stop and reverse adjustment is mainly because we want to be sure that we have more odds on our side before bailing out of our position. We want to try to protect the trade we're in, the long trade. We don't want to jump short, change direction without additional confirmation. The additional confirmation is the adjustment we do by pushing the entry lower and the stop higher for the stop and reverse, and forcing the price to push through a little further. Just a tiny bit more price action confirmation. It's not too much, it's just a little. Because if you do too much, obviously that has problems too. But nowhere is there any reason that I could think of to also start messing around with the rules of the setup itself. Because that's a slippery slope that leads to other problems. So it begins with the whole idea that if you overthink things, you end up with this complicated, muddled mess, and how are you going to resolve it? This is just one trade, but think back on, hundreds of trades, thousands of trades, your backtest results, the rules of your trade plan, etc., etc. So if you're going to make a rule like that, I'm not saying you are, by the way, I'm just using this as a point of emphasis. As long as you could prove it works and stacks the odds on your side based on solid backtesting fundamentals like, we do with the UTA spreadsheet and fast testing and all that, then by all means, adjust the rules if you prove it. But if not, there's a reason that setup is what it is. I don't know enough to want to change it or fight with it. Like, I got this phrase I always think about in my head when I'm up against these kind of questions. Don't fight City Hall. City Hall always wins. The trade setup itself is what it is. I'm not going to bastardize it unless I could prove that the bastardized version is better. So, Brett, let me know if that helps. Yeah, and John also making another good point. Like, these are real subtle things. There's a tool in the calculator that you can use that will adjust the entry for you. and then you don't have to think about it. But it will also change the sequencing of every trade that happened before and every trade that happens after. Because all of a sudden, instead of the entry being here, the entry is down here. And then the two bars that close above will cancel the trade. And that's an option for you. Then you have something that you can test. It's printed on the chart. But I always do it manually because I don't want to back adjust every single trade that happened. I only want to adjust the trade that I'm in at the moment. I only want that stop and a reverse adjustment to occur on this sequence of two trades, not every single trade that happened in the past and in the future, unless that's the chart you've tested. If you put the stop and reverse adjustment on the trade automatically, and you could do that, for example, you could open up the calculator, use stop and reverse adjustment. You see how mine's set to false, but you could set yours to true. It's also going to kick in the key level adjustments. It's going to adjust the 2 ticks, says so right there. And then it does change the sequence, because look what happens. It never hits the entry. I got my green line in the wrong place. It never hits the entry, and then it does give you the 2 closes above the balance line, and look, that setup is now canceled because the calculator turned on that stop and reverse adjustment tool. It totally changes the sequence of trades. I'm not saying that's good or bad, but it also changed every trade that occurred in the past and will change everything that occurs in the future, also creating a different sequence. Not necessarily a bad sequence, just a different one. So you could turn on the stop and reverse adjustment tool, but then make sure you've done that and established your test results, your win-loss column in the UTA spreadsheet over the last 100 sessions, and you like the results. Okay, that's the important factor here, because that's a really good point. Notice that the next trade would have missed target 1 by a tick or 2. It would have been a break-even trade, but it still would have been better than the loser and the bigger loser, right? It would have been a smaller loser and a break-even. It actually turned out better like this, but this is one sequence. The next trade loses, the next trade wins. So that's the thing. It's a matter of how you decide to use the tools, but the most important thing is what you test on your own to establish your trade plan rules. And I've always done this in my head manually because I don't want to change the entire sequence, because that's not something I've ever tested. That's the main reason. I'm not saying it's good or worse. You have to choose and establish that on your own. In the end, you want to believe in what you're doing. So this is kind of work you really need to do on your own. Okay? Hopefully that makes sense. Brett says I had moved my stop to the reverse entry and I stopped out for the second loss for the session. Yeah, that's what happened. Claudio, for ES and NQ, do you use a time chart or a tick chart? If time, what time frame do you use? And if tick, how many ticks do you use per bar? Good question. It depends. What strategy are you referring to? So Claudio, I've got a few different strategies, and depending on which one, like I'm not fond of the ES, so it's not really a market I trade. And the NQ, honestly, I'm not too fond of that either. I'm not crazy about charts that are a quarter point tick, where you need 4 ticks per point. It's just not my favorite chart. In fact, if I were going to choose one of those, the one I would choose would be soybeans. Actually, I'm going to answer your question as best I can, but we didn't look at how soybeans did this morning. I just want to make sure. This one trades in quarter point ticks, just like the ES. It's a 1.25 momentum range bar. Every bar is 5 ticks. Now, this is not going to be what you would use for ES or NQ, but you could use a momentum bar. We could look at that. I'll show you some ideas. So right here, you have an obvious adjustment, I think, with a good sized trade, that you want to adjust that entry right above that spike on the left. If you don't make that adjustment, then you're going to end up getting reversed to short here, and the short's a nice big winner. So either one and done or two and done. Or if you need another trade, there's that one. So even if you need 3 trades, you're literally done in about 10 minutes. Claudio, not sure if you've ever considered soybean futures, but if I had to choose between ES, NQ, or soybean futures, I'd be choosing soybean futures with the 5-tick momentum bar and counterpunch trader, a trade plan that's been winning like this for nearly 10 straight years. And in a few minutes, you hit your goals and you're done. Just saying. Remember, I am the backpack trader. So as far as time goes, if you're using Catapult Trader, one of my strategies, we were looking at Catapult with this custom Renko chart on the NQ. But Catapult's got a nice plan that uses a 5-minute bar with the ES. I don't have it loaded. But the 5-minute bar I like if you have the right strategy. So you want to have a strategy and a trade plan. And also you have to be willing to spend the time, because a 5-minute bar takes time. I just showed you on soybeans in 10 minutes it was already done with 3 trades. Well, on the ES with a 5-minute bar, that's just 2 bars. I mean, you could have how many bars before you hit targets and stops and whatever, many. So if you want to spend that much time each day, then maybe you might like a 5-minute chart. But for a tick chart, I guess the best answer is, let me ask you a question. Are you familiar with the 3-step sniff test? Because the real answer to your question needs to come from you, so that you believe in what you're doing and you actually see and you go through the process of proving it to yourself. Okay, so the 3-step sniff test is a tool for you. It's a technique to establish which charts you should be paying attention to. And so it's my typical answer when someone says, please recommend a chart to me, which is kind of what you're asking, right? So there's 3 steps to the 3-step sniff test, and we can go through them. I'll go through them one by one. There's a real good video on it on my YouTube channel also. So if you don't mind, I'm going to take a little 2-minute break, and when I come back, we'll go over it. All right, I'm back. I feel I'm losing my voice here. Hopefully you guys can hear me okay. So, Claudio, are you there? Let me ask you something. Let's choose a chart first of all. Do you prefer ES or NQ? Let's look at what you're leaning towards as a first choice. If one is more favorable than the other, just let me know. I'll pull up that chart and we'll go through the process. ES, okay. And are you using any of my strategies? Are you using counterpunch, spotlight, catapult? I'll pull up an ES chart and we'll kind of go through the process of trying to figure out what's a good candidate to trade. Counterpunch, perfect. Okay. So I'm going to borrow the soybeans chart, which is kind of set up for the quarter point since it's priced exactly the same as the ES. And do you want me to look at the ES or the micro ES? Change the symbol. ES, gotcha. Let's see, we're in June. Let's look at the current contract. Yes, M. So this is a 5-tick range bar, and this is going to be way too fast, and we're either looking at a tick or time. I think with Counterpunch Trader, you're going to be better off with a tick chart. The time-based charts could work, and I mean, you could even look at like a 2-minute, I don't know. But the problem with time is that they're not as dynamic, right? They're based on time. You could have a lot of trades in one bar or very few. So you could take the same technique I'm going to show you and look at different time charts and see what you see. But I'm going to go with tick. Tick is more dynamic, right? Because the bars don't care about time. They care about order flow. Basically, every trade that hits, every bid or ask that gets hit is a tick. It's what's counted as a trade, regardless of the size. It's how many trades happen. And so it's more dynamic to what's actually happening in the market. Time is kind of artificial, right? Even though every trader and their great Aunt Bertha uses time-based charts, so it does have some value. I think tick it really depends on your testing, but let's start with tick. So I always like to use Fibonacci numbers. You don't necessarily have to, but I would say let's start with a 987. 987 tick, that's the one that comes after the 610 tick. So I would look at the 610, the 987, and then the one that comes after 987. What is it again? It's 15... someone figure it out. It's 987 plus 610 is the next one. I'll let you guys do the math, but that would be the next fib. You don't have to use Fibonacci numbers. 1974, thank you. That's right, it was a good year, I remember that. Anyway, we'll start with 987. I look at this chart and it just doesn't look very attractive to me. And what I see is, all right, so first of all, this is Chicago time, right? So the sniff test, this looks awful. There's no range, there's zebra stripes, and there's a lot of wicks. So, you know, this is the kind of chart that will put you in the chair at the therapist office. Just saying. Doesn't mean it isn't good, but not what I would choose. So here's the thing. This is what makes the ES so hard. You have 491,000 contracts being traded, so you get to hurry up and get in line and wait to be filled. So the one thing that makes the ES really difficult is that if you hit your target, how do you know you get filled? You probably didn't. So you don't exit your trade when you hit your target. Instead, it backs off a tick or two or three at $12.50 a tick. Extremely expensive And then what do? Do you mark it out, pay more slippage, and you've just given up a huge percentage of your trade. Even though it hit the full target, you, the trader, didn't get it. You got much less. Now multiply that out over a lot of trades. And this is irregardless of what chart you're looking at. That's just a fact with the ES and why I don't like the ES. It has to trade through the price to guarantee you get filled. Right? So then how do you test it? You have to make sure it traded through the price, or you can't consider it a success. And that is the problem. If you can't test it, you can't prove it to yourself. And if you can't prove it to yourself, you're not going to believe in it. So in order to learn how to trade the ES, you have to do it in the markets with real money. It won't even work as a sim. You can't even practice in sim, because you're just going to learn bad habits, because the sim is fake. The sim account might say you got filled when you wouldn't, or you didn't get filled when you did, or you paid more slippage than you would have, and it's just garbage with the ES, in my opinion. So that makes the ES incredibly challenging. So let's talk about the 3-step sniff test. So that's the overall issue I see with the ES. Meanwhile, I showed you the exact same charts, change the symbol, but a quarter point tick, $12.50 a tick, $50 a point, forget the symbol, and in 10 minutes you were more than happy with soybeans. So I'm just saying it's not even a close call which one you should be trading between the two if you want to win a lot. Just saying, Claudio. Okay, so apart from all that, the sniff test, this starts at 8:30, by the way. Let's get to 8:30. Remember, 8:30 exchange time. So a lot of trading going on at 8:30. Here's 8:30. Right there. So you can see that this is going to be 2 and done. It's not bad. Would have got long here. Would have got short there, and it would have been a nice, you would have lost a little bit on the exchange, the stop and reverse. It almost got to target 1, just barely missed. Maybe you're moving your stop to break even at that point. And then the second trade, a nice winner, and the third trade, a nice winner. So it actually won pretty good in the first few minutes, and that's really all that matters if you're testing with the 3-step sniff test. So the 3-step sniff test starts with question number 1. Are there enough trades in your session? Obviously, we can see there's a lot of trades. Are there too many trades? Maybe. You kind of figure that out on your next session. I don't think there are. I mean, I think the 987 tick is a good tick chart if you're going to trade the ES, and if you're going to focus on right at the beginning, and then another idea would be to focus on right at the end of the session. And then anything in between you could use a sniff test to establish. Okay? And there's other tricks that you can do. Like the ES is not a terrible market. Don't get me wrong. You can make a lot of money with the ES. You just have to deal with the additional challenges that it presents. It's unique. Very expensive at $12.50 a tick, and you have to work extra hard because you have to trade through your price levels to guarantee you're filled. Right? Like, check this out. And I know I haven't given you the sniff test yet, but I want you to see this because these are the things you notice when you start doing a sniff test. If you're going to target 3, which is 44.49, if it stops right at 44.49, then you probably didn't get filled on the target. But this one did trade through by 1 tick. And so there's a case where you would have been filled. But if you're not, let's say it stopped right on the target, and you're going to see that happen a lot. What do you do then on the next bar when it comes all the way back up at $12.50 a tick per contract? What are you going to do? And I'm asking this rhetorically because that's a question you need to answer for yourself, right? You have to have an answer when you're trading live. Some people will wait 3 seconds and then mark it out. If it came down and hit target 3, are you going to wait for it to come down and hit it again and maybe trade through it? What if it goes all the way back up? So trade after trade after trade, you need to have an answer. All right, so let's say you have an answer. Now you can apply the sniff test, because the sniff test needs to have, the 3-step sniff test has to have basic rules that you can test. What your start time is, what your goals of the session are, and what your stop time is. Okay, so we were just referring to like goals of the session. Clearly that's a winner, but maybe you're going to find many that aren't, and then it goes up against you. What are you going to do? That's part of your rules that you need to have in place so that you can do the proper sniff test. So the first question is, are there enough trades in a session? I think we can see, let's just use our basic trade plan that you're starting at 8:30 Central. Your goal is to hit a target 2 winner. Your primary goal, hit a target 2 winner and have a positive result, and then you're done with power of quitting. And then you could test that. You could repeat it each day. Not saying you can't then expand upon it and trail and go to a bigger target or whatever, but you want a basic one that you could succeed with. So then you ask, are there enough trades in a session? And the answer is clearly, in this case, yes. The next question, and by the way, the next trade, also winner, and this one missed target 2 by 1 tick. What do you do in that case? I mean, that's a pretty good trade, super accurate, trying to get 24 ticks, and it went all the way up to 23 ticks. To me, that's a successful trade and a profitable trade, but what are you going to do? Where do you take profit on that? We call it trading for profit, where you have a rule that you take partial profit. So you have to, again, you have to know what you're going to do. So I'm just bringing this up because I'm noticing this, missing target 1 by 1 tick, passing target 3 by 1 tick, missing target 2 by 1 tick. You got 3 really nice trades in there. But how are you going to handle it with the difficulties that the ES presents? All right, so let's say you got rules and you figured it out. Sniff test 1, you could answer yes. There are enough trades. Sniff test 2, are the trades an appropriate size? So are they too small? If they're too small, you get way too many trade setups, you get whipsawed to death, the expenses don't justify the profits. If the trade's too large, maybe you don't have the capital for it, maybe there aren't enough trades all of a sudden, so are they an appropriate size? But I would say the answer to that is yes on this chart. These are nice sized trades in my opinion. So you don't want to risk more than 2% of your account though. So depending on how you're capitalized is how you answer this question. The purple trade, the first trade of the morning, was 21 ticks. So that's 5 1/4 points. That's $237. 5 is 250. $267. $287. Oh man, $267.50 is what it is. $267.50 of risk on that trade. Do you have over like $11,000 or $12,000 minimum? Because that's what you need to trade one contract if you're only going to risk 2%, right? If you have $10,000, you could risk $200, and this is bigger. This is $267.50 on that first trade, and what if it loses? How does that affect your account? So sniff test 2, are the trades an appropriate size, is going to be based on your own capital. So maybe you look at a micro if you're not capitalized sufficiently. Okay, those are the 2 first tests, and those are the easiest ones to answer. You can just see them. You can go ahead and look at not just today's session. go back and look at the last 10 or 12 or 20 sessions. It's really easy. Just go back and look at them. And then you could answer question 1, they're an appropriate size. And you can answer question 2, the average risk. There are enough trades and it's an appropriate size, you see? So this is just one trade. That's just one trade of 21 ticks, but you want to look at the average of like 20 trades. You want to look at like the last 20 sessions, say, and average what the risk is. The white trade here is 16. So that's $200. It's less than the first trade, right? And the next trade is 21 again. So you're getting a sense of the size of these trades, but not enough with just looking at one session, right? So you use your eyeballs, look at 20 sessions, answer, are there enough trades, and are they an appropriate size? The third test, Claudio, before I finish, and this is the most important, and you could find my video on the YouTube channel and really look, this is a skill everyone should have, because you're going to always wonder, is what chart should I trade regardless of the symbol, right? It doesn't have to be the ES, it could be the NQ, it could be anything. It could be a momentum bar, a Renko bar, a tick chart, a time chart, who the hell knows what kind of chart. And you could use this 3-step sniff test to quickly determine if you should pay attention to it or not. And let's face it, there's even one other question, and that is, do I really want to succeed as a trader? Because that's the most important question. And if the answer is yes, then you need to build a foundation for yourself that you can believe in. That way, when you're at the right edge of the chart, you can literally pull the trigger and take the trade you're supposed to take. And you're not going to be able to do that if you don't establish that foundation of belief. And that is what this process is about. So the next step is the most important in the 3-step sniff test. It's called the fast test. And the question you want to ask and answer is this: can you quit your session with a positive winning result a vast majority of the time while minimizing your drawdown with efficient trading? Controlling your drawdown with minimal and efficient trading is the question. Can you win your session a majority of the time while controlling your drawdown with minimal and efficient trading? That's the third question of the sniff test. So you go back 100 sessions, you line your charts up, you have your start time, your stop time, your goals, the chart that you've established, yes to the first 2 questions, and then you start counting winning and losing sessions. Takes you a couple hours maybe, and you build a list of winners and losers and break-even sessions. Not trades, sessions, based on the rules that we just talked about. Start time, stop time, how many trades, what's your goal. If you hit your goal, you quit, go to the next session, you do it fast. Use chicken scratch counting. 1, 2, 3, 4 cross, 1, 2, 3, 4 cross. That way you can quickly count 5, 10, 15, 20, right? And you quickly count your sessions. And I would say do it to 10 different trade plan ideas. It might take a few days. But your first question that you should have asked is, do I want to succeed at trading? And if the answer is yes, and this is the kind of work you need to do, because this will help put you in a position where your chances of success are extraordinarily greater than anyone else's, because you're stacking the odds on your side. You see, so you do that. And if you do it to 10 different trade plans, the 1 or 2 of them that are the very best are going to say, hey, here I am. They're going to present themselves to you, and that's going to give you so much insight. You're going to learn so much from this process. You have no idea what you're going to learn. One of the most important things you'll learn is what not to trade. But you'll finally hone in on what you should be paying attention to. And with the 1 or 2 best out of 10 different fast tests, you commit to then entering those trades into the UTA spreadsheet and building a trade log and a win-loss column with statistics. If you go through that process, by the time you get out the other side, you're going to be a rock-solid trader. And then it's just about practicing it, getting your 25 in a row without a mistake. And then you've earned the rights of passage to go live with real money. If you go through that process, you're going to save yourself treasure, countless dollars. And you're going to have something you can believe in that's going to work for you, that you could trade and make money with, which is why you're trading. So you got to think like a business person, build your business properly, and that's how you do it. Those are the steps. I don't know anybody that succeeded by shortcutting those steps. I'm not saying people haven't. A lot of people succeed, but most people fail. But if you do those steps, your chances of success skyrocket. That's what you want. So now, Claudio, hopefully that helps. Hopefully it helps all of you. Brett Eisman, just back to your earlier question about the stop and reverse situation you were in. The same techniques I just explained to Claudio is what you would do. You'd be on step 3, of course, with your stop and reverse dilemma. What's best for you? If you want to just stick with the rules, or you want to change them a little bit, or whatever, go through the fast test technique of whether you're quitting your sessions more often positive than negative, because that's a real quick way to determine if the rule is good or not. I don't know if Claudio's still with us. Anyway, guys, hopefully that helped. If you want to learn more about the 3-step sniff test, Claudio, good. So I'm going to say goodbye to you guys, but before I do, let me show you a video that I think you should watch. Yeah, good thing, Brett. One second, I'm going to find this for you. Okay. Here you go, I got it. I'm going to put this in the comments, but you'll find it easily on my channel here. You're in the channel now in this live stream, but there's a URL for my video on the 3-step sniff test, and I would review that. And then let me also just reiterate how important it is that you commit yourself to learning the UTA spreadsheet. And you want to spend time, if not every day, every week, using it. It will change your life. There is no tool more powerful to helping you get to success as a trader than the UTA spreadsheet. It's my own personal opinion, but it's also one shared by many, many others who have taken my words of advice to heart and really started using it. It's what changes you. It's how you build the belief you need and how you actually see. And you start learning how to trade above the forest rather than in the trees. The UTA spreadsheet is the tool, and all the training videos are also on this same YouTube channel. There's a playlist. They're old, but they're still good. And you could use the UTA. Claudio, you have access to it. It's in the Counterpunch website. All my member sites have it because it's that important. I used to sell it for $500 a copy. Now I give it away to all of my members because I want you to succeed, and this is the most important tool. This is what comes after you fast tested, because it economizes your time. And you got the one there where your fast test, the cream rises to the top, you pick the best 1 or 2 and you dedicate to that UTA spreadsheet. You'll succeed. Your chances of succeeding will skyrocket. All right, so hopefully you guys enjoyed the session. Please hit the like button if you haven't done so already. I really appreciate it. John will be here tomorrow, and Thursday I'll be back on Wednesday. Everyone have a wonderful rest of your day, and I'll see you next time.